you and welcome to Investing in Notes with your IRA. And I wanted to first introduce, my name is Alia, and I'm here with my partner Terri Garner of Investors in Action and Inspired Capital Partners, as well as Kaaren Hall from uDirect IRA Services. Welcome, Kaaren.
Thanks, Alia. Hi, how are you?
Excellent. So today, Kaaren is going to share with us how you can self-direct your retirement savings with an IRA and build your wealth tax-free in a vehicle called Self Directed IRA. And then Terri and I will take over and we'll share some information about how you can invest in trust deeds as well as notes. They're all considered notes, but we'll talk about two different classifications of notes. We'll talk about doing fix and flip rehabber loans, as well as purchasing non-performing notes. So two different ways you can invest in notes with your IRA and help build wealth for your retirement. So Kaaren, why don't you go ahead and take it away and share with everybody how they can self-direct their retirement.
That's great. Thank you very much, Alia. I greatly appreciate the opportunity to be a guest on your presentation today, so thanks. As Alia mentioned, my name is Kaaren Hall, and I am president of uDirect IRA Services. And what we do at uDirect is we help people self-direct their IRAs. What we don't do, though, is give tax advice or legal advice, and we don't recommend any particular investment. So we are here to talk to you about how to self-direct your IRA, what are the rules, what's the power of the self-directed IRA, what can you do, and that's what I hope to be able to teach you today. When it comes to self-directed IRAs, it's important to remember that you're all about saving for retirement when you self-direct your IRA. And that's really important because there's a huge deficit between what Americans have and what they actually need to retire. I mean, something like a $6.6 trillion deficit today. We all know Social Security is probably not going to be in there to fill the gap. So that's why we're all here today, is to learn more about how we can save for the future. And self-directed IRAs are certainly here to help you do that. When it comes to total retirement funds, like everything altogether, there's something like $20 trillion in retirement funds that are out there in the world, or in America, I should say. Now, it's not all in IRAs. Some is in 401ks, pensions, and so forth. But of all the retirement dollars combined, of the whole pie, only about 3-4% of it is in what's called alternative assets. And by alternative assets, that just means not the stock market. So if you think about it, if you've got a deal and you're looking for money, a self-directed IRA may be the place to look, because anyone with an IRA or a 401k from a previous employer can take that money and self-direct it into maybe your deal. Food for thought. If you haven't heard about self-directed IRAs before, you're not alone. I'll say that for sure. Not a lot of attorneys and CPAs even know about it, and there hardly a day goes by when I don't hear somebody telling me that their CPA said, "Oh no, you can't put real estate, you can't put notes in an IRA, but you can." And the truth of it is, you've been able to do it for just about 40 years, ever since the ERISA laws went into effect in 1975. So it's been a long, long time that you have been able to self-direct an IRA. Nothing new at all. The only difference between a typical IRA and a self-directed IRA is the asset that the account can invest in. Now, with a typical IRA, it's stocks, bonds, and mutual funds. Maybe throw in a CD in there. But with a self-directed IRA, now just the doors are open to so many different possibilities, like buying notes, making notes, real estate, running private placements, investing in an LLC, for example. So many different kinds of things. Precious metals is another thing that the IRA can invest in directly that you can't invest in using a typical IRA. So what about losses? I mean, that's fair, right? You invest, with investment comes risk. What if you lose your money? This is important to mention at this point because losses can't be written off, so you always want to make sure you do your due diligence on any investment opportunity, because these losses in IRA accounts don't get written off. So always do your due diligence. What are the limits? A self-directed IRA can invest in anything except life insurance contracts and collectibles. That's according to the IRS. They don't tell us what the IRA can invest in. They just say what the IRA can't invest in. So you see, it's a pretty short list right there. So your IRA is not going to buy collectible cars or fine works of art or collectible coins, artworks. You see what I'm saying. Other than that, your IRA can pretty much invest in it so long as this asset is for investment purposes only. Now, what if you've got an employer retirement account? If you do, that's great. If you do, I hope you are maximizing your savings capacity. If your employer matches, hey, that's free money, isn't it? So please save as much as you can for retirement. I'm all for it. But if your funds are with your current employer, you probably will not be able to self-direct those funds. You really have to wait until you leave the company. Or if you're 59 and a half typically, you can request what's called an in-service transfer. You're in service, but you're going to request a special transfer out. So go to your plan administrator, and then you can request that and see if they'll let you move the money out of a current employer account. But typically, you do have to wait until you leave the company to roll over that retirement plan. No good conversation about self-directed IRAs is complete without discussing the rules, because these rules are not intuitive. And you may not have even heard of these rules before if you're not familiar with self-directed IRAs. So if you're going to use your retirement funds to invest, really good to know the rules. The reason is so that you have the right expectations. If your expectation is that you're going to be able to do X and you find out you can't, you'll be disappointed. So I'm here to help you set the right expectations so you have a good experience. If you go to the IRS's website, it's irs.gov. irs.gov is the IRS. Look up Publication 590. That gives you the guidelines on IRAs. Now, taking some information from that particular site, it says you're not going to borrow money from the IRA. You don't sell anything to the IRA you currently use. You don't use it as security for a loan, and you're not going to use it to buy property or any kind of asset or make a note for personal use, present or future. That's important. But digging deeper into the rules, with self-directed IRAs, certain people are qualified and certain people are disqualified to the plan, the IRA plan. The disqualified people, they are your lineal ascendants and descendants. What that means in English, really, is your parents and grandparents and their spouses, you and your spouse, and then your children and your grandchildren and their spouses. Okay, so basically those people are disallowed, plus anybody offering services to the plan. The people who are qualified, though, are the people who are out to the sides, like your aunts and uncles, your cousins, your brothers and sisters, nieces and nephews. They're allowed. So here's how that applies. Really prohibited transactions seem to fall into three buckets. And what we do most of our time here at uDirect IRA Services is we look at the transactions that our account holders are putting together. We're looking to see, is this a prohibited transaction? So number one, neither you nor any disqualified person can benefit from the IRA today. The IRA is only for retirement benefit, not present benefit, not personal benefit, not indirect benefit. Your IRA is never going to loan money to your company. Your IRA is never going to buy an asset you already own, which is kind of number two. But so just understand that no personal or present benefit from your IRA. Number two, you're not going to buy, sell, or exchange assets between the IRA and someone who's disqualified. So your IRA doesn't buy a house that your dad owns. Your IRA doesn't sell a house to you. You're not going to buy a house from your IRA. You take it as a distribution. It wouldn't be purchased. And number three, a disallowed person doesn't provide goods, services, or facilities to the plan. Here's what that means. Say, for example, your IRA makes a note, and your father has a loan servicing company. Well, your father is disallowed to your IRA. Even if he does it for free, he's not going to service the note in your IRA because that's a prohibited transaction. Say, for example, your IRA buys a house, and you're a realtor, and you want to maybe take a commission for selling your IRA a house. Well, you're disallowed to your IRA. You can't provide those services to your IRA, and you certainly couldn't benefit today by taking a commission. So this is where these things get a little intricate, and we love to talk to our account holders and whoever calls and just say, hey, tell us about your deal. What are you looking to do? Who's involved? Who are these people? How are you related? So that we can understand, because if you commit a prohibited transaction, the IRS can disperse your entire IRA to you, and plus penalties and taxes. So it can be a kind of an unpleasant experience, and we definitely want to help you avoid that. When it comes to self-directed IRAs, what's also very important is to understand the structure, especially the fact that you are one entity, and and your IRA is another entity. So when your IRA is investing and making a note, your IRA is the lender. When your IRA is buying a house, your IRA is the buyer, the investor. You don't sign for your IRA. We sign on behalf of your IRA. So if you understand that, then you really understand the structure of self-directed IRAs a lot better. Now, when it comes to buying real estate with your IRA, or really any other asset, there are pros and cons, right? Real estate in particular, because so many people like to invest in real estate. Capital gains, all the money that comes back in tax-free or tax-deferred. That's a big pro to self-directed IRA investing. It's not diminished by tax. Also, there's no time limit for holding whatever investment you make. You can invest today, sell it tomorrow. The clock is not ticking. Your IRA can lend money, but your IRA can also borrow money, and it's sort of unusual, so we'll talk about that in a minute. But there's a potential to earn a larger rate of return on your invested capital, and here's why. If you invest with your own personal cash and then you get a return, that return is going to be taxed. So you don't have 100% of that return to go back out in your next deal. When you're investing in an IRA, 100% goes back in the IRA. It's not taxed yet. 100% of that return can go back out into your next deal. So you have the opportunity to compound faster for that reason. Now, the downside to buying real estate with your IRA is you're not going to take tax deductions. No capital losses or anything like that. Now, of course, with self-directed IRAs, no matter what you invest in, you are solely responsible for all the gains and losses. It's self-directed. You are telling us what you want to invest in. That's why the company is uDirect, because you direct us to invest your retirement funds into the assets that you choose. And of course, you can't replace losses. So again, due diligence is a must. Now, I mentioned that your IRA can not only lend money to borrowers, but your IRA can borrow money. Typically, this is to purchase real estate. But the loan has to be non-recourse. A very common misconception is people will call and they'll say, hey, I'm so excited because I found this property. I want my IRA to be a down payment. Well, that's not going to happen. And the reason that's not going to happen is because you can't personally guarantee a loan to the IRA. But your IRA can borrow the money itself. A non-recourse lender will make a non-recourse loan, kind of like a commercial loan, to the IRA account itself. And so that they're going to base the risk factors on things like the cash flow primarily, but the property's location and its condition and things like that. So if for some reason the IRA were to default on that loan, the lender can only come against the subject property. Not a lot of lenders to choose from. And a larger down payment is definitely required, 40, 50, 60% maybe. Of course, rates are based on risk, as are all loan conditions, so it's going to be specific to your transaction. And you can't personally guarantee a loan to the IRA. Now, if you'd like a list of non-recourse lenders, I do have a list I'd be happy to send out to you. Just send me an email. My email address is khall, Khall, at the letter U, uDirectIRA.com. Oop, here we go, UDFI, tax. Guess what? When your IRA borrows money, your IRA can be taxed. That's right. So it's not 100% of the investment. It's, say, for example, you're 50% leveraged. If that's the case, then 50% of the proceeds are subject to this tax. Unrelated debt-financed income tax. And there's another time when your IRA can be taxed, and that's when your IRA is seen to be running a business. Flipping property, for example, can be seen to be running a business. So check it out before you invest. Look at irs.gov, again, the IRS's website. Look at Publication 598. Discuss it with your tax advisor. These taxes are filed on a Form 990T. But sit down with your tax advisor if you think you may be running a business in your IRA, or if you think that you're going to be borrowing money, a non-recourse loan. That's when those taxes pop up their little ugly heads. So here's how you get assets into an IRA, be it real estate or a note or whatever it is. First, of course, you open the self-directed IRA account, and I say it like that because it takes time, and you have to factor that in. Opening an account, usually we get it open within 24 hours, but moving the money from the current custodian where the money is today into the self-directed IRA is going to probably take a couple weeks. So you want the account open and funded before you find the asset you want to invest in. So Then you find what you want to invest in. Remember, the IRA is the buyer, not you personally. The custodian signs the offer to purchase. So you give us a direction letter, you give us the note, you give us the contract, whatever it may be. We get it signed, and then funds are wired or sent by check, whatever you request, and then all proceeds go right back into the IRA. So all expenses of the asset are paid for by the IRA, and all proceeds go back into the IRA. And so we're going to skip some of this for the sake of time, but I'm also going to discuss the IRA-owned LLC, commonly called the checkbook IRA. But here's what it is. You have a self-directed IRA that's open and has money in it. And then you have a third party, not yourself, but a third party, because remember, you're disallowed to your IRA. Typically, you have an attorney draw up an IRA-owned LLC, a special purpose LLC. Your IRA buys 100% of the initial units of that LLC, so the money goes from your IRA account into the checking account of this new LLC. You are the managing member. It's your IRA, you're the managing member. Now you've got checkbook control over your IRA funds. You know how they say with great power comes great responsibility? Well, it was never more true than with the checkbook IRA, because now you are very responsible to understand all the IRS rules about investing that money. So can you do it? Yes. There's some expense to set it up. Your state may have a fee for it. I know in California there's an $800 fee per year to the Franchise Tax Board. So there are pros and cons to it. It can be a great tool, but just know it's there and it's a tool that can be used. Let's talk about now, kind of switch gears and talk about what kinds of plans can be self-directed, because it's not just the self-directed IRA. We say that because it sort of lumps it all together, but it is the IRA. It's the traditional, the Roth, the SEP, the inherited IRA, a simple, a spousal IRA. All of these can be self-directed. We do plans for individuals, so we also do the individual K, but you can even self-direct kinds of accounts that aren't even retirement accounts, like a Coverdell, sometimes called an ESA or Education Savings Account. And that's how you save money for kids to go to school. $2,000 a year is the contribution limit per child, and that money can be self-directed. So can a health savings account. Very interesting, something to look into. If you qualify for a high deductible health plan, you can have a health savings account along with it, and those proceeds can be self-directed. So how do you do it? How do you self-direct an IRA and have your IRA and your retirement account invested in alternative assets? 1, 2, 3, here it is. Open, fund, invest. Complete an application, give us some paperwork. We have a $50 setup fee. Our annual fee is a flat fee of $275 per year. Then you fund your account. You can do it in one of 3 ways. Number 1, you write a check and make your annual contribution. Well, that's going to depend on a few things. It's going to depend upon your account type. It's going to depend upon how much money you earn, your income, and your age. So you want to talk to your tax advisor about how much you can contribute. That's one way to get money in your IRA. Another way is to transfer IRA to IRA. To do that, you fill out our transfer form, you sign it, you give it to us, we sign it, we send it to your IRA custodian, and they move your money over. Again, it takes about 2 weeks. The third way to get money in your self-directed IRA is a rollover. When it's a rollover, it's coming typically from a previous employer plan. So you don't fill out our paperwork. You go to your previous employer and fill out their paperwork. So once your account is open and funded, then you tell us what you want to invest in. You give us a direction of investment form. It's 1 page, together with the contract. And you tell us what you want to invest in, and then we disperse your funds as uDirect. Ha ha, go figure. That's why we named the company what we did, because it's self-directed. If you want more information, look at our website, uDirectIRA.com. You can email me at khall@uDirectIRA.com as well. And you know, we have a Facebook fan page too. It's called uDirect IRA, where you can go find recent articles and network with other self-directed IRA investors. And we have a page on LinkedIn called Self-Directed Investors /Networkers. Again, a great social forum to mix and mingle with other self-directed IRA investors. And so with that, I am going to turn things back over to Alia. And Alia, thank you again so much for the opportunity to talk about my very favorite thing in the world, self-directed IRAs. I really appreciate it.
Absolutely. And Kaaren, thank you. You know, we've just had a great relationship that we built over time with, as you know, Terri and I both utilize uDirect for our IRA services. And We're going to share today a lot of different tips and techniques on ways that you can build your portfolio inside of your self-directed IRA. So we'll get started with that here in just a minute.